and welcome to another review for the month ended January 31st. My name is Ambrose Omodio. We are looking at the market performance for the month of January and the outlook for February as we have crossed over to the new month. If you look at the market performance for the month of January, you say so far the market has remained up despite having a little pullback in the last trading week of the month. And the factors that are responsible for this pullback are many, which I told them in Abuja seminar that we need to wait for the outcome of the MPC meeting. Since that meeting was held and the CBN or the monetary policy members voted for an adjustment in cash reserve ratio or cash reserve requirement, market has reacted negatively to that decision. And what does that mean? It does mean that once they said cash reserve ratio is adjusted, that means CBN has shifted the bar for more money to be held back from the commercial bank. Indirectly, money in circulation will drop because CBN took such decision after they have studied the market, the economic report of December for inflation, saying that inflation have gone to all-time high of 11.98. And when inflation is moving in that direction, it's not too good for the economy. Then the CBN or the monetary policy decided to try to curtail the money in circulation. That means so that to reduce monetary induced inflation. And that decision was taken. Also knowing that CBN has also retained the loan to deposit ratio, which is clear. They've done that effectively for the real economic growth that was seen to be sustained, so that the bank will not withdraw lending to the private sector. The few positive economic indicators we have seen as a result of this policy of loan to deposit ratio that started in September last year, and it was held to, even as we speak now, it has helped to move funds from the bank coffer to the public, to the real sector, to the private sector. That it is this fund that you use to drive work productivities. When there is no fund, productivity will also be dragging feet. With this policy, we have seen little improvement in our economic data, and which we believe it will go a long way to sustain the economy going forward. On that note, CBN said, okay, we can't toil with this policy, this measure or decision or decision we are taking. They decided to look the way of cash reserve ratio, just to withdraw, to let funds going out, monetary funds to come down a little. And also don't forget that they still retain the restriction on OMO, which the implication on the financial market. That means all the maturing OMO investment will not be invested back to the OMO window or the TBA or the Treasury bill. On that note, we expect that despite the reaction we saw last week, going forward into the new month, we expect an adjustment. This adjustment will come as a result of the earnings season we're expecting. The earnings we have seen in this same month of January, and also particularly in the last trading week it was as a result of companies trying to comply to the new rule of NSE and SEC, said that they can release. It has been on ground that after the end of a quarter, you can release your quarter result within 30 days at the end of that quarter. Knowing that the fourth quarter ended December and January is the ideal month for them to release the results, and they all comply to release their third quarter. In the process, they release unaudited financials for 2019. That unaudited financials that come because those numbers are coming without dividends attached, without reward for investor. Knowing that I have said earlier in this program that the March earnings season is the peak of Nigeria stock market earnings season. Why is it peak? We have other quarters that results come. It becomes the peak because of it comes with reward. Most of the companies that had December year end, this is the period they pay their dividend, and every investor, even other market players, want to use this dividend period to create wealth and at the same time to reshuffle their portfolio. And because the numbers that came in the month of January were released without reward, without corporate action, you see market reaction was almost flat, no reaction to that number. But rather, for me, such numbers have given designer investor an insight what to do going forward. Knowing that also that if you look at the global economy, market has also slowed down as a result of the ravaging virus that emanated from China. It's also threatening the global economy and the market. You can see that market and the global economy have also been missed for the last week of January, when the number of deaths continue to rise on a daily basis globally, and even come back home here. If you look at the ravaging insecurity issue, and also this last fever here, all these things are things that is affecting the market indirectly or directly. You also, as an investor, should consider which area of the market should I put my fund, what should I do at this point. And also, because of the adjustment in the last MPC meeting, you can see that the Treasury bill has also adjusted a little, but still in the range of 5 to 6%, which is still also low to attract to discourage a lot of investors to invest in Treasury bill, unless those that are risk averse. There are some investors that they don't want to take risk at all, and because they want to, their return also will remain small. It will remain small. Why I say remain small? If you don't want to take risk, your return on investment will still remain at the ambit of on that territory that you don't want to take risk. That is why you see some people will still want to go and invest in Treasury bill of waiting for 365 days. We're expecting 5 to 6% return. For me, it's not a good investment window for now, unless you don't. Those that have big money, yes, those that have big funds, those that are high network individual that have big one, and PFs that don't want to take risk can still go there and be waiting, expecting that this policy will change. And at the same time, this policy that came on Friday after the MPC meeting has little move from interest rate in Treasury bill now from 5 to 6%, which is also not too attractive. For me, investors should target where you have a dividend yield of almost 12%, 13%, 12%, 13% for 2 years, above even the inflation that we say it is ravaging, that is on the rising. That such environment should be where it should be. If you are a risk taker, and at the same time you take calculated risk, you don't just invest for investing stage. This number that were released, as I'm saying, for the fourth quarter and not the full year, are giving investor insight of where to be and how to reposition their portfolio. That's why I see that there was nearly almost a sell down for the week. A sell down or a correction or a pullback, anything I want to call it. That week, people were trying to adjust their portfolio. Where should fund? It's expected that in investment you reallocate your assets, you balance your portfolio, because you have seen another information coming from the regulator. For me, equity market remains best for those that know how to play the market. If you look at the month, for almost 2 years, the market has been on a downtrend. If you draw this trend line here, you see that market have suffered losses for almost 2 years. But in the month of December, November, the market turned green. In December, it went down, but almost it closed red. But for the month of January, market break out the downtrend curve. The market was out from this curve, giving a sign of recovery. And this sign of recovery is what we say that the change in policy from CBN, from Nigeria Stock Exchange, has also helped the market here. And the changing pattern, the buying pattern of the market changed. That's why in December, the Santa Claus rally that was expected also do not really show, because day traders were abusing the market, moving the market up during the day, and towards the end of the market, the market set down to take profit. It was only just the end of the year rally that was sustained for 3 days, and that ushered in the January uptrend what we just saw in the month of January, before people taking profit in the last trading week of the month of January, just because of policy change. And at the same time, the ravaging virus globally and even locally, and insecurity around market here. But for me, since that the numbers we're expecting are already for the year ended 2019, you know that yes, funds also is on the downside, leaving the market because of this set down for the last week of January. But if you look at the money flow index for the month of January, you can see that the chart is showing that funds is still entering the market, or funds have entered the market for the month of January. Are still looking low. But if you go on a weekly chart, we can see that funds has also left the market for the sign that funds are leaving the market already, as the money flow index is looking down. But at 73%, it says that there are funds still in the market. But if you go on daily chart, see that it was massively down the way the fund left the market for the last trading week of the month of January. You can see. And also, if you look at your Bollinger Band here, you see it's getting tight, and the price action or index action has already hit the lower Bollinger Band, which is also a sign of what? A rebound. But this one is depending on the market the market forces as the market opened this week. I told you earlier on this program that you are entering the month of earnings season proper. This earnings season is one that are coming with what? With corporate action, dividend declaration from different companies. But the one we saw in the month of January was fourth quarter unaudited result, and in the process unaudited full year were among the number were released. But those unaudited full year has given designing investor an idea and insight what should be expected from the companies that have released results so far. You have seen even the company that have released good results, the market do not react because it didn't, no dividend was accompanying the number that were released. Once these companies start announcing their dividend and other corporate action, you see that market will respond to it. Yes, the liquidity level as we speak will still be there because more almost going to mature going forward into this new month of February, and the one that matured in January, most of the players or fund managers are still waiting to see how market will react. But as I told you earlier, a market that is having an average dividend yield of between 6.18 and between 5.8 to 6.18 now to speak is very, very healthy for every form of investment decision that you want to take, either for long, for short term. You can look the way of the market as we speak now and position, because once we have entered this month of February, we expect companies to look at those early filers for full year, and you can see that those early filers for the year did not release their fourth quarter because it is optional. It's either you release your fourth quarter for 2019 ended December in January, and also subsequently before the end of March 31st you release your full year. But those that are early filers, you check their number, they are not among those ones that have released the fourth quarter. They've even submitted, some of them have submitted their shareholders, their directors have met and approved their annual report for full year report for 2019, and also some have sent to the regulators like CBN to approve this result for them to announce their dividend. And those that are not sending for anybody to approve, like the UCAP and others, they've also sent their close period that their result is going to come up in February. For that, investors should know how to position. And if you want to play the dividend, if you are one that want to play the dividend period or earnings this one, you should know that you should be in stocks by now. In those that you have seen that they've not announced, they've not released their Q4 or unaudited, that have sent their close period, and also those that have shown, those that you have not seen among those that release their close period, that release their unaudited Q4, are expected to release their full year within this month of February. And when it comes with dividend announcement, this dividend announcement is going to impact the numbers positively and market variant. And also it depends on the liquidity in the market. You see that the market fundamental has changed tremendously in the month of January. We expect that it will sustain. And what was the change? It's just because of monetary regulatory policies that were changed also in September that have impacted the market. We will see that this decision that CBN has taken to curtail inflation, and also know that in this month of February we'll also be looking to see the inflation figure for January before the middle of this month. Will also be that will also give a direction where the market, and you know that the next MPC meeting also will be in in March. For that, we feel that this February will also be a good time for you to play the earning season between now and March. And also, don't forget that by end of March, we're expecting the first quarter for 2020, sorry, for the month of April. We said this is earning season that you need to play with, and this is what drives equity price. Earnings is what determine price movement, either for the short term or the long term. Once a company earnings are good and these numbers can support their price, in the short term and the long run, it's going to drive the prices up. You need to invest wisely at this one. And also, we advise that now you are positioning for the earning season, you need to keep your eyes in the market. Don't just invest and go to bed. Watch if your expectation is not met, you quickly cut your loss and move to another position. Don't just invest and go and sleep, because this earning season will determine where the price will go. And also, the good thing is that CBN do not adjust the loan to deposit, which I've said earlier. At the same time, they do not remove the restriction from OMO for investing in OMO and treasury bill for corporate bodies and high network individual. Despite that, the bond market is trying to come up because they are taking advantage of the new policy that non-interest rates that many state government and corporate body are putting up opportunity or putting up their bond together to take advantage of this low interest rate. Is good anywhere where there's low interest rate, the economy benefit from it. It gives a lot of activities, a lot of strength to the economy to find direction. Especially our own that have been dragging feet for a long time. This low interest rate should wake up the economy and activities. And you know that when there's productivity in the economy, it will oil the macroeconomy. And also when there's productivity, employment will be created, and at the same time the money will also be flowing, because when there's employment, people can earn. Now that we're seeing insecurity here and there, it is part of what has contributed to inflation hitting 11.98, because many farmers were not in the farm because of what insecurity. Prices of goods were up, and also border closure, all of them contributed to the inflation. But I know as we go into first quarter, there will be adjustment in all these things. The government will sit up in terms of security, the border closure, one over the other. I think yes, we have benefited from it. We also need to do something that it will release some pressure on the local goods. Yes, manufacturers has used the opportunity to look inward. We have seen this is what we want. Since we have happened, let's also adjust so that the economy will remain in a good float and grow in the right direction that we expected. Like I said earlier in the last program we had in December and even in January, that if you look at the yield curve of Nigeria market, so that it is now that our yield curve is looking like those matured economy that you see the interest rate is low. On that note, that means we are gradually finding things, gradually doing things right, which I believe if it is sustained, it will go a long way to impact the economy. Yes, the policy of CBN and the monetary policy and the fiscal need to work together. This is the time, and I believe that the Presidential Economic Advising Council, they are not sleeping. They should take decision and advice. Yes, we might not be hearing them talking blah blah blah, but we need to see what they are doing to harness this monetary and fiscal policy to drive the economy. Once the economy has direction, things will work out and everybody will benefit from it. On that note, we invite you to, if you are staying outside Lagos, if you are staying in Port Harcourt environment, that will be in Port Harcourt on Saturday, the February 8th, to do what we know how to do. Invest 2020 is moving to Port Harcourt, and I see you there. For you to also to take advantage of the 10 golden stock. As we speak, despite the adjustment in the market, the 10 golden stock have given good returns above the market, and also the average return for the 10 golden stock as we speak now is still above 10%, while the market has gone as low as 7.46% for January. While the 10 golden stock is above 10%, it tells you that the market and the stock we have choose for 2020 are still stock that investors can still key in at this point and also expect good results before the end of the year. And also, like in that 10 golden stock, we made it clear that in the first 150 days you should know your position, where you have made money, you exit to watch the market, and you know that the first 50 days will be existing, will be elapsing, will be expiring, or will be coming to an end towards the end of April and early April or late March. You should take your position serious and sell as necessary. Don't wait until you make 100%. The only thing in this market is that most of our traders or investors will know when to buy, will don't know when to sell. If once you are entering in any position, set a goal. That is why an investor buy and sell signal will always give you your buy range, your stop loss, and what your call profit target. At that target price to sell, that target, once you touch it, we are giving you sell alert. That will guide you. That I don't say the price, the stock will still go up. Yes, it might go up after selling. That does not concern you. Let other investors that bought, let them enjoy it. You have meet your target, your set goal, you move. Most times, once you refuse to sell, it might come down the next day. And even if you want to exit the stock at a particular time, you might not see buyer. That is why just have a goal when you are entering any position. Set a goal for yourself, and if you achieve that goal, come out immediately. Your goal, you can see that what is happening in the money market and the fixed income market. You see, for a whole year, you see a rate of or yield for 7.14% from the fixed income. You see highest there 12%. You see 9% for fixed income bond. But if you go to Treasury, the maximum for a whole year 364 days is 6%. Are you going to if you are making 364 then in 40 days, in 190 days, in 80 days, you are making 12%, you are making 30%. What stop you from not existing? If you analyze what you are made for 40 days, about 25% is far better than staying in an investment of 6% in 365 days just because you don't want to take risk. All you need to take calculated risk, buy stocks that has fundamental, that in case even your decision go, the market go against you, you can look at, okay, the dividend yield alone can give you a good return. If you look at the banking sector, these are the sectors that really pay dividend, and if you look at the dividend yield there, you see that most of the dividend is above whatever money market can return for you. That means you should take a wise decision and know where your money should be at this point. Thank you, and God bless you.